Hello everyone and welcome back to another market review. This is Silent. Today we're taking a look at the NASDAQ December contract for 2025 and we're starting off with a weekly chart. If you remember from the previous episode, I brought all of your attention to the weekly wick constant encroachment from our previous week's candle, that 25,089 level. We were utilizing that as a barometer going into today, and we wanted to see if we trade above this and show some strength, or utilize it as a premium array and trade softer and away from it. So the first scenario played out. We got a strong delivery through the CE and a follow through above the previous week's high and delivered a new high on the week. We settled today at 354. So going into tomorrow, it'll be interesting to see if we can continue chugging along and start reaching into the 400s or the 25,500 levels. Again, we're just going day by day here as we reach into all-time highs. Tomorrow could very as well be another indecisive day. So staying inside of the 354 range or expanding higher would be my objective, while keeping a limit to the downside with our weekly wick constant encroachment. So I'm leaning on more bullishness / consolidation while remaining above that weekly wick constant encroachment. Alright, dropping down to the daily chart. If you remember, we had closed to the downside yesterday after reaching into a new high in the week. We opened the candle here, traded higher, and then went lower into our daily buy-side imbalance again and settled off to the low. And then today we opened up, traded down into our daily rejection block. We spring right off of it and deliver into a new high on the week and get a nice strong up close candle, break us out of that range as we went lower, rallied above, and then we're reaccumulating on top of the previous down close range on the daily chart with that imbalance here. Utilizing that old high on lower time frames in today's price action will be very interesting to see, because as soon as we open, we pretty much just drop down into it and then give a nice rally throughout the day. As soon as we cross back over the opening of this candle, we continue just chugging higher and close very strong. On the 4-hour chart, I last left you with this imbalance to pay attention to. I was initially expecting weakness from it to give us a sell-off back down into our daily buy-side imbalance and try and reach down to that low. I mentioned yesterday how I'd rather be bearish or seek consolidation, because I wanted to give that 3 drives pattern a benefit of the doubt to see if it would roll over, but recognizing the support from that daily rejection block and an unwillingness to even sell under the short-term low that was produced during this drop was a clear indication that this imbalance would be overtaken and overlapped. And this up close candle here, after tapping into the rejection block, we trade lower and then close above. The very next candle opens up and then just wicks down below the low of that CB range, while just taking sell stops pretty much and then delivering higher. And you don't even get an opportunity to see this be used as support. It does all of its discount pricing and reaccumulation on the inside of these candles. So by the time we get a stronger confirmation of seeing this at least be closed above halfway, you would have been having to enter inside of this candle, because the confirmation comes after this close and it's already above the high of the CB. So you would have had to been doing some work inside this 4-hour candle to get an entry at the discount portion of this range. Waiting for this candle to open and try and get a retest of the high is also something I would have been looking out for, but it was not given today. So we just closed with a pretty blunt end of the candle and then opened, and virtually no wick there. So we just open, tick down, and then just rally right up into the new all-time highs and close really strong and get another strong closure during the afternoon session. So pretty much all you would have had to do today was see that rebound from the rejection block on the daily, and then just be a buyer at any point during the day, and pretty much expect that imbalance to get filled and that lower time frame hourly level to get filled as well, and then maybe hold a runner for a new all-time high. This bearish 3 drives, we were okay with watching it try to give us sell-off initially, but when that doesn't happen, when there's no imbalances created to the downside, you're either going to have to switch bias or sideline, and obviously the move today would have been to have switched bias, because this move here was just relentless in terms of bullishness, and a very nice thing to see. Even though this previous kind of price action looks like a bearish idea, the unwillingness to sell off and the creation of premium arrays that are disrespected, you have to get out of the way, otherwise you're going to get rammed with your stop losses if you're going to be trying to short. So, this is not something you want to see fill and then attempt to be shorting in here. You're going to either have to just be okay with it rallying and being a buyer, or just sidelining, because after this imbalance is filled, it's not going to be something that just trades lower afterwards. This is the result of putting in a classic bearish pattern and then them just ramming it against everybody who is trying to short early. On the hourly chart, again, I brought that hourly SIBI that we were watching yesterday, and we want to see the sensitivity at the low of that range and see some sell-off. But every time we retest this level, the sell-off is weak or is unwilling to produce a break of structure to the downside with an imbalance. So these are our first kind of clues that this is not going to be something bearish, and you need to be having your guard up for a bullish move, or a consolidation is bound to happen. So seeing this drop like this and retracement, every time we retrace and take out buy side liquidity, we're not able to roll over and produce sell side imbalances. So this is our first clue that it's not going to be a bearish thing. Trading up through the midpoint of that 4-hour imbalance and overlapping the hourly SIBI, all of that move happens in one candle. By the time we get a really nice confirmation that this is going to be a bullish rally, it already feels like it's too late. So you would have just had to be a buyer at any point here, and then be lucky to get this kind of rally. So even though it looks like a nice rally today, unless you had these context of the bearish move not playing out and swapping sides, it would have been really hard to catch on to any of this and feel comfortable. On the 15-minute time frame, I've included our current week as we've delivered so far. So we've included Monday and Tuesday, and then this Wednesday's price action. We dropped down yesterday into our new week opening gap and accumulated overnight, and opened our Asia range below yesterday's Asia range. So to me, this would have been something bearish to be looking for, but again, all of those contexts of the bearish move not playing out, you have to switch bias and be okay with being wrong and seeing what will happen, as a result of no bearish breaks to the downside. Instead we get a nice bullish rally. After we open at midnight, we get a Judas swing to the downside, and we begin rallying after creating a low in London. We break to the upside through Asia range high just before the pre-market of New York, and going into the pre-market, we dip down 3 times and break below the new day opening gap. We pop back above it and reaccumulate here. So you would have had to been being a buyer down here or at any of these discount ranges, and just close your eyes and hold on tight for this rally, because it was violent and very strong and gave us a new high on the week and a new all-time high today. If you could appreciate the respect of that daily rejection block high as we drop down and created that turning point in London, this would be our first indication of the bearish narrative failing. So seeing a rally like this it's already warning us that, hey, if there's not a significant drop before the New York opens, then most likely any declines during the pre-market or the New York Open are going to be for a buy, because we've shifted structure to the upside during London. As we drop down to the 5-minute time frame, I just wanted to give a closer look at the consolidation during Asia, the drop down. We take out Asia range low just before 3 o'clock in London and do our rally. Going into our London lunch, this is our dead time. A nice drop down as the 7 o'clock opens. So we get New York open here, we drop down, rally, respect the SIBI, and drop down. Then we spend time here accumulating. We're accumulating at the new day open gap instead of selling off. We pop back inside of our higher time frame levels, those sell-side imbalances, and reclaim them as an inversion array. We respect the low here and rally right through the constant crutchman, both of those ranges, and then reaccumulate at the upper portion of that range with this down close candle. Price delivers strongly, pops above Tuesday's new day opening gap. We attempt to rally from it, and then this is our inducement. We drop down below that low to clear out short-term sell stops and reaccumulate here inside this imbalance with this down close candle. And we rally, delivering into Tuesday's high by lunchtime, and continue rallying throughout the end of the day. The FOMC meeting minutes really didn't do much in terms of a mask or a disruptor. A lot of the move was already underway during the New York Open, so that by the time the minutes came along, we were just, it just did a little fizzle to the downside and reaccumulated and continued on its course, delivering into new all-time highs to close the day. On the 1 minute time frame, I just wanted to bring our attention to the respect of the low of that higher time frame imbalances shaded in purple. Notice the respect of that on the 1 minute chart as we open in New York. Price delivers higher, and this is our first presentation for Bay Gap. We reaccumulate inside this range. 2 nice chances to get in on a long opportunity here. Price rallies, reaccumulates inside this imbalance here, and uses this as a mitigation block, this up close candle. Price drops down into it, reaccumulates here, rallies, spends time here, giving traders a feeling that maybe a reversal is about to happen, because we sell off here into the new day opening gap, we rally, and we can't make a new high, so people are shorting here. We drop down, price trades under the low, so they're shorting more as we get into this range, but instead we pop up, break a high, and reaccumulate more, and we continue pushing into that bust of liquidity from Tuesday's high. After we get into that range, we pull back, take out lunch, sell side liquidity, spend some time accumulating there, and pop up. We have a area of buying interest inside this fair value gap. Price drops down to that and then rallies here. And as we get into the PM session, our first presentation fair value gap is shown to us, and then respected. Price delivers higher from that range and gives 2 opportunities to be a buyer to catch the final rally of the day, going into a strong push as we get into 4 o'clock. Alrighty, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, please let me know in the comments. Don't forget to leave a like, and as always, subscribe. I'll see you all tomorrow.